Meet Ray Dalio, the mastermind behind Bridgewater Associates, the world's largest hedge fund. For 13 out of 18 years, it has dominated the financial market. So what exactly does Ray Dalio use to stay profitable? Well, he uses two powerful strategies: pure alpha and beta. Today, we'll break down the beta strategy, showing you exactly how it works and how you can use it to level up your own portfolio. Let's dive in. What is the beta strategy? This is a smart, diversified approach that invests in stocks, bonds, commodities, and currencies without trying to predict or beat the market. Instead of chasing big wins, the goal is to stay steady, even when the market dips, protecting your portfolio and capturing the broad market's returns over time. Think of it as a way to profit through balance, not just luck. What are the types of the beta strategy? Ray Dalio divided the beta strategies into two major types, namely 1. Strategic beta. 2. Tactical beta. What is strategic beta? Strategic beta is a long-term, no-stress passive investing method. The fact that it's a passive method, it means one lets the portfolio run automatically on its own because the risk has been reduced and spread through diversification. It's about spreading your money across stocks, bonds, commodities, and currencies without trying to predict the market. Instead, you're aiming to match the market's overall performance. It's a steady, passive approach that helps you grow your wealth over time without the pressure of trying to beat the market. Under strategic beta, billionaire Ray Dalio uses a powerful technique known as risk parity. How does Ray Dalio select his assets using risk parity? Ray Dalio uses risk parity to carefully pick a wide range of assets that perform well in different economic situations, such as during growth, a recession, inflation, depression, stagflation, or deflation. The assets must be 1. Uncorrelated, and 2. The assets must behave differently in different economic environments. He invests in precious metals like gold, silver, and platinum, cryptocurrencies like Bitcoin and Ethereum, treasury bonds, and even rare collectibles like paintings and rare books. His secret? The more uncorrelated these assets are, the lower the risk and the higher the potential for stable returns. By balancing these diverse investments, Dalio creates a portfolio that thrives no matter what the economy throws at it. This portfolio is known as all-weather fund. What is tactical beta? Tactical beta, also known as dynamic beta, is all about adapting to the market's mood. Ray Dalio uses this strategy to adjust his investments on the fly, shifting the balance of assets to take advantage of changing economic conditions. For instance, during deflation or an economic slowdown, he might lean into bonds. But when the economy is booming, he'll tilt toward equities to capture growth. It's like having a strategy that moves with the market to maximize returns, no matter what's happening. How does the tactical beta use the economic cycle to make profits? There are 4 phases of the economic cycle. The first phase is the growth phase. In the growth phase, the economy is growing. People are spending more, businesses are hiring, and production is increasing. This phase is characterized by rising employment, increasing consumer confidence, higher investment, and growing demand for goods and services. Investors like Ray Dalio will invest in stocks and real estate, which often perform well during this phase as companies make more profits and consumers have more money to spend. The second phase is the peak phase. This is the top of the growth phase. During this phase, the economy has been growing for a while, but now it's reaching its limit. It's characterized by high production and employment, but inflation may start to rise as demand outstrips supply. During this phase, while markets may still seem strong, this is often the point when smart investors start to prepare for potential downturns, as growth can't last forever. The third phase is known as the contraction phase. After the peak, the economy slows down. Businesses produce less, unemployment rises, and people spend less money. This phase is characterized by declining demand, falling profits, rising unemployment, and lower consumer spending. During this phase, the investment behavior is that stocks and other risky assets may lose value, while bonds and safer investments become more attractive. Central banks might lower interest rates to stimulate the economy. The fourth phase is known as the trough. This is the bottom of the contraction phase, where the economy is at its weakest. However, it sets the stage for the next expansion. This phase is characterized by low production, high unemployment, reduced consumer spending, and lower inflation. During this phase, investors may start looking for opportunities, as asset prices like stocks or real estate may be at their lowest, offering the potential for future gains when the economy rebounds. The beta strategies by Ray Dalio can be replicated by any investor who is trying to increase their profits and also stabilize their portfolio. The strategy does not aim to beat the market, hence the investor won't be stressed by the pressure of fluctuating assets classes. The beta strategy has been partially responsible for the success of the Bridgewater hedge fund during the turbulent times of the 2008 credit crunch and the 2020 global COVID-19 pandemic. Dalio's views on the economy have been closely watched by retail investors and financiers throughout his career. "I have enormous respect for Ray," said Jamie Dimon, Chief Executive Officer of JP Morgan Chase & Co., the largest U.S. bank. "He is a great thinker and an outstanding investor," Dimon said. A self-proclaimed Sinophile, Dalio also enjoys huge popularity in China, where his company became the #1 foreign hedge fund house last year, even as Washington and Beijing were in the midst of a harsh auditing dispute.
Thanks for watching, and please remember to subscribe, like, and click the notification button.